Welcome to Daily Exchange! Guys, we're here with Aleks Svetski talking about Bitcoin's dominance and will altcoins survive? We'll see you guys right after this. Guys, we're back. We're here with my good friend Aleks Svetski, CEO of Amber. It's amber.app. Check it out. It's an incredible micro investing app. Aleks, you are, if I am not mistaken, the winner of the closest prediction of the daily exchange Bitcoin price. Congratulations on that as well.
Thank you, sir.
Just to give context,
I was
Aleks,
the most bearish, wasn't I?
Oh, you said you pitched $3,532 on New Year's Eve. The price was $3,733. You are the winner, and we're going to ask you a question at the end of this that's related to that. But we'll keep that to the end, guys. But that's a bit of an introduction.
My crystal ball.
Now, it is fitting that you won. You call yourself, I guess we would say, a Bitcoin maximalist. I think you might, a supremacist.
Yeah, there's a friend of mine. Some people know him, some people don't. But he came up with the term a supremacist. So
it's nice.
I choose that.
I like that. It's nice. So would you consider yourself a Bitcoin maximalist?
Yeah. I mean, I came into this space via Bitcoin, and then I took the altcoin journey afterwards. And kind of, if everyone's seen that meme where you start with Bitcoin, you discover altcoins, and then you sort of come back to Bitcoin, Monero, and then you sort of come full circle again to Bitcoin. So I think a lot of people take that journey. I took it faster than a lot of people did, because I just really dove in and was hungry to understand what was going on here. But yeah, so I don't speak from a place of not understanding what the other things are doing. I speak from a place of understanding them very well and realizing that it's all just noise. So you've got Bitcoin and then you've got noise, and that's basically the narrative that's important. Now,
talking about Bitcoin dominance right now, the price reached in June 13,000 US again. We're currently at around 64.5% Bitcoin dominance again. Now we've got a graph here. Let's talk everyone through this because I think it's really important. Just gives a bit of a high level in terms of the dominance of the market. Now, zooming back in time, in 2017, we had a big bull market. We had Bitcoin there at around, would say 65% again. It's back around that same level, if not slightly more, almost hitting 70%, I believe, at some stages. Ethereum back then in 2017 was 16%. We had a big rally in percentage, right? So you can see there, what's that, a peak of Bitcoin only being about 35%. So everyone was out, a lot of other people were out of Bitcoin, and then it sort of came back. Now what's really interesting in this, if you look at the gray band at the bottom, these are all the other coins. And you can see the big explosion, the Cambrian explosion of ICOs.
Scambrian.
Scambrian. Okay.
Moving along.
You got me on that one. But we've seen it in these coins are sort of tailing off a bit. Bitcoin absolutely dominating again. Ethereum under a bit of duress. You can see Bitcoin Cash there. I guess sort of again much smaller. Ripple again. It's sort of, what's that? Maybe 5%. It was quite a season of Ripple there for a while.
Yep.
I think
they're starting to rage quit. So.
So let's talk about John Paul from Kenya has put an analysis together where he sort of brought the Pareto Principle out. This 80% of the network comes from 20% of the contributors, and his thesis, and I think we've got another chart here, Joel, if you want to bring that up, we've got the Pareto chart. Essentially, if you looked at the volume-weighted cap of some of these coins, he's actually suggesting it's even higher.
I'd suggest it's even higher than that. But so let's touch on a few things. So the Pareto Principle, for those who don't know, is better known as the 80-20 rule. It's 20% of the producers create 80% of the product, etc. Now, I actually think in markets like what we're seeing in Bitcoin, and particularly with markets like money, or even things like wealth, those Pareto type laws, or these power laws, are even more extreme than 80-20. They're probably 90-10 or 95-5 or 99-1. We've all heard of the 1% controlling the world and all of that sort of stuff. So within each broader Pareto, there's a Pareto in that, right? So there's 80-20, and inside the 20% there's an 80-20 there, and that sort of continues on, where you have the small minority having outsized influence on the rest. Now, with respect to Bitcoin, so coming back to the dominance here, I want to touch on one thing about the problem with the dominance figure. And a lot of people who are in the industry already know this. If I'm some moron who decides to fork Bitcoin or print my own token, I can go and release hundreds of millions of my token. It might even be worth just 1 cent. I might just price it at 1 cent on the exchange, and I'll go and release maybe 20% of my tokens, but keep the other 80% in reserve. That gives me a market cap out of nowhere of hundreds of millions or billions of dollars. Does it mean there's anywhere near that much capital in there? No. Does it mean that there's any value there? No. That doesn't mean anything. So what we've got is this skewed description or identification or calculation of what the Bitcoin dominance actually is. If we were actually able to measure the amount of liquidity in there, I would argue that it'd be even more extreme than what JP did. I think it'd be more a 90-10 or a 95-10, which is, even that is not dominant enough. But what we all know is that no market moves in a straight line. So there's going to be periods of excess noise, which is the period that we're going through now. And we're seeing now a period where, that noise doesn't matter as much because people's fear has taken over. So they're getting the hell out of anything that is, fringe or obscure.
Yes.
And they're moving into where the liquidity and where the actual value is.
Okay. So what is that real dominance that lies within Bitcoin?
Well, okay. Money as a concept. So Bitcoin is fundamentally a reinvention of money. And money as a thing sucks capital, sucks liquidity. So the example I give to people generally is money is most functional when we're all using the same kind of money. So that's why we don't have 10 Australian dollars inside Australia and we don't have 10 US dollars inside the US, right? Because it's non-functional. So money functions best when everyone uses the same one. Money also demands, or the best money acquires all of the liquidity in the market. So if you're a participant in a society, money is the tool we use in order for society to function. You're not going to go and hold the money that nobody else accepts. So what are you going to do? You're going to jump into the main money that everyone uses. So when we look at a network such as Bitcoin growing and evolving, it's a monetary network first. So it's going to suck all the liquidity out of everything else because everybody is going there, and it's got this recursive effect that is only going to get stronger. So for every year, and this is the Pareto law and the power law at work again, is for every year that Bitcoin subsists and gets stronger, it would take another competitor 10 years to catch up to where Bitcoin is. Because Bitcoin's next year is bigger than the previous 10 altogether. So it's a runaway train, and that's how Pareto laws sort of function. Same thing happened with the internet. It ended up being a runaway train. These other networks like AOL and all that sort of rubbish that came up that tried to compete, they could not catch up.
Okay, so let's talk about some of the causes you think that's bringing Bitcoin to being that real dominant player. Just high level, we've got a couple of key things. Square only uses Bitcoin. Square, its integration is only integrated with Bitcoin.
Jack Dorsey's not dumb.
Right, we've got the Cash app as well, processing $2.47 billion of transactions last year. It only uses Bitcoin. We've got trading, in terms of trading investment, we've got the CBOE and ICE only doing Bitcoin. We've got BAC, which is very close to getting up and running as well. Still to go live, obviously. Again, Bitcoin. Fidelity, launch a spin-off Fidelity Digital Assets in terms of
Bitcoin only.
Bitcoin only.
Yep.
And I quote from Arlene Roberts: "We currently have a select set of clients we're supporting on our platform. We'll continue to roll out our services over the coming weeks and months. Based on our clients' needs, jurisdictions, and other factors, currently our service offering is focused on Bitcoin." Payments. AT&T saying only accepting Bitcoin payments. We've got a note here, Joel, if you want to bring this up, with BitPay working together with AT&T, accepting Bitcoin through BitPay in terms of its transactions. We've got major retailers, right? We've got Microsoft, Overstock, Expedia, all accepting Bitcoin. Why do you think that is? Why are they only accepting Bitcoin?
Let's go back to the start. So, I agree with the use cases for Square, Cash App, and all that other stuff. Like this stuff with AT&T, I'll touch that in a minute. But I wrote an article earlier this year, which was, Amber is a Bitcoin business, not a crypto company. And I made a delineation between why we chose to be narrow and deep and build on Bitcoin and not worry about all the other noise that is crypto, effectively. And these people are, exemplifying that. So I touched on things like Bitcoin is where all the liquidity is, number one. And that's what to fundamentally run a financial product, you need liquidity. You need something that is broadly accepted or broadly perceived as some sort of financial product. We don't know what any of the other cryptos are. Well, are they smart contract platforms? Are they this? Are they that? Nobody actually knows. It's just noise. Security is another thing. If one of the biggest reasons exchanges get hacked all the time is because they're trying to manage multiple different wallets with multiple different infrastructure, and then if something goes wrong with some obscure shitcoin on their platform, and it's somehow able to hack, like we saw that hack recently where someone got through via a shitcoin and then stole all the Bitcoin, right? They stole the Bitcoin, not via a fault of Bitcoin, but via an access point through one of the crap coins. So the smart money, the Fidelities of the world, the Squares of the world, the Jack Dorseys of the world, and what I'm going to say, the Ambers of the world, because that's what we're doing, is trying to help people acquire and get exposure to Bitcoin specifically. So that's happening in that space. And these guys aren't dumb. They're not going to put their money in something run by some 20-year-old kid called Vitalik, who is so out of touch with the world that he's trying to do whatever he's doing. So the part I want to touch on though is this AT&T. So you would have noticed that the screen that we put up didn't say AT&T now accepts Bitcoin. It said AT&T now accepts BitPay. This crap here, the adoption of retailers accepting Bitcoin, that's all bullshit. So I'm sorry, I don't agree with any of that crap. That's got absolutely nothing to do with the price of Bitcoin or the adoption of Bitcoin, because AT&T is not accepting Bitcoin. They're accepting dollars, and BitPay is just the reverse exchange for them. They just off-ramp to dollars. So AT&T couldn't give two shits, and neither could any other retailer at the moment with respect to accepting Bitcoin. That's not what Bitcoin is today. The narrative today is people buying and holding. That is a use case. That is the most important use case today, because the narrative right now, like before something can become a broadly accepted medium of exchange, something must be a broadly perceived store of value. And the only way something can become a market-driven store of value is by more and more people storing capital on there. So that savings mechanism that Bitcoin is today is where the use case is. This other stuff is just noise. Like, I'm not a fan of BitPay. I don't think they're a very ethical company, but that's another thing, that we don't need to discuss here. But really, those companies, like Square, like Cash App particularly, and like what we're doing with Amber, are driving people into holding the most important asset class of our time, and that's Bitcoin. And that is why the price is appreciating.
Now, we've got another part here, a bit of news. We've got Liquid, which is the side chain of Bitcoin, This is from Blockstream, and I'm with Adam Back,
Yep.
announcing that they have an atomic swap between Tether, which is the US dollar, and and I guess Bitcoin itself. Interesting development here.
Yeah.
What's your thoughts on that?
So of all the noise that we saw in 2017 and 2018 and all that sort of stuff that crypto was going to do for the world and that Ethereum was going to do for the world and that blockchain was going to do for the world, 90%, here's another Pareto law, 90% or 99% of that was just garbage, was just stupid, blockchain, lettuce, blockchain for lettuce and whatever other dumb idea they came up with. But there was a subset of ideas that potentially made sense. Now, I did a talk earlier this year, which was called Blockchain is Dead, the Future is on Lightning. Now, what I defined in that talk is that all of the activity and all of the promise that was in that small 1% or 5% of things that made sense is not going to be built on Ethereum or some shaky foundation. It's going to be built on the one network that provides a guarantee of digital immutability, digital scarcity, and digital security or sovereignty. Liquid is an example of that. It's a side chain on Bitcoin, and things that it's going to allow to happen are things that were once promised by Ethereum and all that sort of stuff, but that were done in a method that was broken upon a foundation that was not stable. All of that cool stuff that we're yet to understand and yet to imagine is all going to happen on Liquid, on Lightning, and on abstracted layers on top of Bitcoin.
Okay.
And that is going to further reinforce the liquidity on Bitcoin and further reinforce its power law and its dominance.
So let's talk about that. So, we've got platforms like Ethereum, EOS, Cardano. Do you think that this Bitcoin, side chains will replace those smart contracts?
100%. And anything that's cool out of those smart contract stuff like Ethereum, EOS, Cardano, and any probably not EOS, but probably Ethereum, Cardano, anything that's kind of cool on those things, that will all end up being layers on Bitcoin. So there may be a world with Ethereum, but not with a native Ethereum token. Or if there is a native Ethereum token, what Ethereum will do is it'll abstract or it'll push down its requirement for decentralization and immutability to something like Bitcoin. And it will be a side chain of Bitcoin that will provide smart contract scripting and maybe a derivative native currency off that is backed by Bitcoin, and that'll give some relevance to the Ethereum that's used as gas on its network. So you cannot have multiple layers of digital scarcity. You cannot have multiple horizontally competing proof of work networks that provide digital immutability or digital scarcity. They will all accrue to the one that gives the best guarantee of that, and then they'll all build off that. So I think there is definitely some cool stuff in there, and there is definitely some smart people in there. But over time, and this isn't a next week thing or a next month thing or a next year thing. It may take 3, 4, 5 years, but the disillusionment will come and they'll all be on Bitcoin, and that'll just further reinforce.
So even like gaming, video streaming, things like that.
All that stuff, when as things like Lightning and sidechains and all that sort of stuff matures. So let's say, for example, the gaming and the video streaming and all that other stuff is happening on Ethereum now. At some point in time, they're going to run into their own trouble, or they're going to want to do it. They're going to want to provide a guarantee of immutability, or they're going to want to provide an economic guarantee for the unit that's being used to denominate the value that's being transferred. That will all end up being chucked on Ethereum. On Bitcoin, either via a second layer, a third layer, or some sort of infrastructure like that.
Brilliant. Now, 2017, 2018, even there has been some of this new stuff. We're talking about altcoins, the ICOs, and what came up. A lot of white papers written, a lot of new tokens created. Thousands of cryptocurrencies built on Ethereum as well, which is interesting. And even some built on other blockchains as well, like EOS and things like that. But the thing is, and you'd say they were trying to find the next Bitcoin.
Yep.
A lot of these, big promises. What do you think about some of these failed ICOs?
Well, I mean, it was inevitable. I remember early on when we were setting up Amber, I was getting heaps of pressure from people saying, oh, why don't you do an ICO? You'll raise heaps of money. And, you know, like, I thought about it. I honestly did. I grabbed 20 white papers for a weekend, and I went away. I went to Byron for a weekend, and I said, I'm going to read about all of these, you know, white papers from people that have raised small amounts to large amounts, you know, Binance, this, that, all of these guys. And I said, I'm going to design my own token model because I thought this might make sense. By the time I finished reading that garbage, I felt not only 20 IQ points dumber, but I realized that this entire ICO thing was a complete scam. People were selling, they were using the narrative of Bitcoin, which is decentralization, power to the people, you know, access to the everyman, all of this sort of stuff. They were using that just to go and print their own money and dump it on people in the bid to, you know, to make money quick or do whatever. So they literally used the narrative that Bitcoin had to do what Bitcoin rose up against.
Okay, so we've got Peter Brandt, who's, you know, he's quite a famous trader. He talked about, and I'll quote, many altcoins benefited from the last bull run of Bitcoin. Crypto maniacs expect alts to do the same again. They may be very disappointed. In 2000, the dot-com bubble is analog. Following 2001, 2002 tech collapse, dot-coms with real value exploded.
Yep.
The alt dot-coms went bankrupt.
Yeah, look.
Do you think that's playing out again, Alex?
I unfortunately think we're still too early in the cycle. So because we're fundamentally dealing with such a small subset of the population that got involved last time, and so much noise and so much misinformation, and things that are fundamentally function like money and that are tradable assets with so much exchange infrastructure, I think we'll inevitably have another altcoin stupidity, but led obviously by Bitcoin first. Because I'll tell you exactly what's going to lead this next run is the smart money that's coming into Bitcoin at the moment, and the large scale buying that's happening in Bitcoin right now will drive it past the prior high, and that'll get Bitcoin back into the media. And then you'll see the next retail mania come. And then along that path, there's going to be people with, you know, the classic unit bias or the classic, you know, bitterness that they missed out on Bitcoin again, you know, when all their friends told them to buy it at 3,000, now it's at 100,000. Then they're going to look to find the next Bitcoin, and they're going to fall victim to the same stupidity again during the next pump. So unfortunately, I don't think we're out of the woods yet in terms of getting rid of all the noise. I don't think it's going to be as big as last time, so we're not going to have the 10,000 or 100,000 X's because it's much harder now to do an ICO unless you've got, you know, backdoor room deals with some sort of exchange to do an IEO, you know, same shit, different smell. But yeah, I just, long term, the trend is going to zero for all the altcoins and for all the ICOs and for all that rubbish, because again, like I said earlier, Bitcoin's going to suck up all the liquidity anyway, and people are going to want to put their money in the one thing that is broadly understood as a store of wealth, because that's the first function of money or of a monetary unit. And all this other crap, like there's ICOs that failed, there's ICOs that exit scammed, and then there's ICOs that did what I think is one thing worse, is they raised all this money, and now they're pretending they never did an ICO, they're pretending they don't have a token, and they're out there, they've gone and taken that money, they've built a product, they've got their own business, the token's worthless, they're never going to list it anywhere. You know, they've got their Telegram group, which is now empty, you know, and the people are like, oh, when are you going to list the token? You know, they don't answer anything. They're like, oh, we're talking to exchanges. And these guys have just literally got themselves a charity, like a bunch of people to charity fund their business, and they're now making money out of a business. And these poor bastards that have gone and invested in their token have basically got the finger. No equity, no rights, no ownership, no nothing. So I actually think that whole ICO thing was the peak of human stupidity, and I think, you know, we won't see a peak like that again, you know, maybe not for another 2 or 3 decades, but it doesn't mean that we won't have another altcoin run. Unfortunately, I believe we will have another altcoin run, but not the same ICO boom that we had.
So what else about 2019 do you think makes it a case for, I guess, a bull run in Bitcoin?
For Bitcoin? Well, I mean, you look at the geopolitical situation and the macroeconomic situation is that I had a friend of mine who's a young guy. He's an accountant. He did very, very well. His company went public when he was younger, and He was one of those people that I've been telling to buy Bitcoin for years now. And he's like, I'll never need it. Well, what do I need Bitcoin for? I got, heaps of money. I got shares. I got this and that. And he's had some things recently not go his way, where people have stolen some money from him, and some stuff happened with business, etc. And like basically, he's had wealth stolen from him. And recently, he's calling me. He's like, if I buy some Bitcoin, can anyone take it from me? And I was like, grasshopper, you've come. So like the reasons people come into Bitcoin are very varied, but I think on the price of Bitcoin is primarily going to move in the early stages, like right now, thanks to more institutional large-scale buying. And their reason is basically twofold. One, store of value asset protection, i.e., the unconfiscatability of holding this asset. So there's a lot of high net worths and wealthy people and institutions and stuff like that that are looking at it for that reason. But then there's also the funds looking to get exposure to what they're now understanding as the emergence of a new asset class. So that's going to drive this run. It will not be retail until retail sees it pass the all-time high, and somewhere during the disbelief of that, we'll see all the retail people come into it. So it's going to be the classic thing was, oh, Bitcoin's 15,000, that's too expensive, I missed the boat. Oh, Bitcoin's 150,000, I better get in now. And so they'll run that final blow off top.
Let's talk about the story. I think let's just go back, because giving context, we're talking a lot about obviously Bitcoin. You alluded to before about your story, about how you learn about Bitcoin. Do you want to tell us about that? What was the journey you went on with altcoins and things like that got you to this place as a Bitcoin maximalist?
I came into Bitcoin via Bitcoin, for my own reasons. I'd heard about Bitcoin years ago. I didn't do anything with it. Then I heard about it, in 2016. It was sort of after I'd left my prior business, and I was looking for something to get involved in, and some dude mentioned Bitcoin again. I was like, is that thing still around? So I looked into it. I started reading. I started studying. And, I found, Andreas Antonopoulos was probably one of the real figures that, really opened my mind to the broader implications of what Bitcoin represented. But, Andreas also looks at Ethereum, highly, like as something. I started going down that path. I started reading about Bitcoin, about Ethereum, and about, centralized finance and all those sort of buzzwords that went around blockchain and all this sort of stuff. And in the early days, I was like infatuated. I was finding out this information, and as most people do, they grip onto a string and they start pulling it. And I started thinking that there was this whole thing about blockchain that was interesting, and there was a whole thing about the ability to raise capital from people without having to go through the traditional, corporate infrastructure and stuff like that. And, Ethereum I found, interesting in the early days, but slowly by slowly, as I actually examine them. So what most people do is they hear about these ideas, they sound nice in principle, kind of like the principle of equality. Sounds nice in principle, but when you think about it, in order to enforce equality, you must, force the people who are good to come down in order to pay for the people who are shit, right? So in theory sounds nice, in practice is really bad. So what most people do is they buy into this ideology that they don't understand. So, and then they go around touting shit like blockchain, crypto, Ethereum, DeFi, and whatever other buzzword. I actually spent the time to look into these things. The first piece that was removed for me was when I realized how incredibly moronic ICOs were and how incredibly hypocritical they were. So if it was just moronic, I wouldn't mind, but I think the hypocrisy was the piece that got to me, is people running around muddying up the narrative of what Bitcoin represents, because Bitcoin truly does represent the first time in history someone is able to store wealth without it being able to be confiscated, inflated, or compromised. That is extraordinary. So they were using this amazing narrative of power to the people and dumping shit on people. So that hypocrisy just drove me insane. So that was sort of like the first pillar that fell apart for me. Then the more I listened to people like, Vitalik and stuff like that with some of their deranged ideas about, proof of work doesn't work, and, a lot of the positions they have about proof of stake and, proof of work being old and proof of work being, slow and non-scalable and all that. They completely miss the point of what proof of work provides, which is, for the first time in history, it gives us a way to convert energy into digital scarcity. So it's the anchor, it's the bridge between the real world and the digital world, the physical world. That is why proof of work will not be replaced. And they're out there trying to reinvent the wheel, and they're promoting, or they're helping accelerate the narratives that don't make sense, like ICOs, like whatever other stupid ideas. So these pillars started to fall off for me. So ICOs, then Ethereum, then that blockchain one. I remember I was teaching courses in the early days, helping people understand what blockchain was, and I remember my own difficulty in trying to explain it. At first I used to explain it as, these segregated data, cryptographically hashed to the, segregated data before it in blocks. And, the more I realized, I'm like, well, that's not immutable. That's not censorship resistant, because if I cryptographically hash them all together, I have no cost in just undoing that and starting new. So that wasn't it. Then I was like, is it distributed ledger stuff? Is it this idea of distribution? And that's not it either, because if you have to know everyone on the network, you don't have immutability again. So really, like, the more I sort of honed in, the more I realized that Bitcoin and its recipe and its unique combination of things, coupled with its immaculate conception, the way it came into the world, the way the founder disappeared, the way it was distributed in the early days, at 50 blocks at a time and broadly dispersed, and then picked up by the libertarians, and the way it proliferated in society. Those things coupled all together are irreplaceable and not able to be repeated. And that, as you sort of go down this path, you realize that's why Bitcoin is special, and that's why more capital will flow into it. That's why as more capital flows into it, it becomes more secure, it becomes more immutable, and that recursive effect is why Bitcoin is going to take up all of the liquidity and all of the depth in the marketplace. Long answer, sorry.
No, it's a great story, and I think it's a great explanation of why, the case of Bitcoin. Are there any altcoins that you think have potential?
No, I just don't think so. I think if you're a smart trader and you're measuring your returns in Bitcoin, I think you can make alpha on Bitcoin if you're really, really good. I don't think people are really, really good traders in general, because trading is contrary to our emotional state. You want to buy when things are high, you want to sell when things are low, because you feel bad. So, most people should not trade. And probabilistically, the math is not in your favor. You would be far more successful just doing what you're doing and just buying Bitcoin. But for those who think they can get alpha on Bitcoin, but denominate their returns in Bitcoin, that's sort of what you want to do. Measuring your returns in dollars is the dumbest thing ever, because, if your returns in dollars are less than your return that you could have got in dollars just by buying Bitcoin, you're wasting your time, basically.
In terms of, you wrote a great article recently in Smart Company. It's called "Corporate Adoption is Killing Blockchain, but Bitcoin Will Live On." I think, Joel, we've got a picture of this. Do you want to give us just a quick summary about this? Because, you do talk a lot about, what corporates are doing with blockchains and private blockchains. And I'll just quote, we've got here from IBM and I always struggle with this name, Maersk, which recently achieved the milestone of onboarding Maersk's two biggest competitors to the platform. This is TradeLens. The nature of an effective blockchain is to create an environment where multiple parties, often competitors, want to coexist. This is from IBM. And I think in this this article, I think one of the key questions is, do you think that, I guess, blockchains, corporate blockchains will take off, given that companies can sort of ideate and play with them and those kind of things? Is that the right place to do that?
No, I don't think so. I think it's this. So I think blockchain is most useful for corporates for PR and buzzwords. That's it. So they want to sound like they're doing something cool. When you really dive into it, you realize it's not actually a blockchain. It's more like a distributed ledger. So that's why that word has sort of become popular now, distributed ledger technology. They're trying to use the word blockchain less now, because there's actually functionally no need to segregate data into blocks when you don't have an economic incentive baked in there like Bitcoin does with proof of work and mining, etc. Mm-hmm. So what's happening, these people who are saying blockchain, they're just using that as a way to say, look, we've developed a a multi-access database or a shared ledger that parties that we know on the network can use together. But let's just label it as blockchain because we'll get a bunch of PR out of it.
Do you think corporate blockchains could just be APIs with standardized sets of?
That's all they are, man. They're just all that's happening now is the IBMs of the world and the big four like your PwCs, your Deloittes, and all of that are just selling overpriced database infrastructure to people like the Maersks or whatever I can't pronounce it either, the Mersks or whatever. They're selling them overpriced database infrastructure to manage their existing infrastructure, probably not much better, but at 10x the price. Mm-hmm. That's all it is.
What about Bitcoin? Do you think Bitcoin's relevant for corporates?
If they want to take payment in Bitcoin and actually hold the Bitcoin, and yes, I think that is smart for corporates. But I think for most corporates, there's very little that Bitcoin represents for them. It's just like having US dollars or Australian dollars inside their accounting ledger. They may as well have Bitcoin in there as well.
Do you think corporates could build on, say, Lightning or things like that?
Yes, down the track, but it's still way too early for them. So
do you see that as potentially like a corporate blockchain, private one is like an intranet, and then Bitcoin might be, or the Bitcoin network might be like the internet or the public
100%.
ledger.
100%, yeah. But that's why, like in the article, one of the things I note in there is that for corporate consortiums that want to maybe collaborate and build some redundancy or build some extra checks and balances within their network, for them, maybe doing some sort of shared ledger makes sense, and there might be some value for them. But it by no means provides value to anybody else on the planet. It might just increase their margins slightly, or it might help, with auditing or something like that, or it might just help keep a few checks and balances in place. But that's it. That's so the effect of that is very, contained. Whereas Bitcoin's a completely different animal. And I guess one of the big things that we've seen recently since we last caught up is Libra being announced, right? And Libra,
what's your view on Libra, Alex?
Okay. I read another article yesterday about this, so it'll be good. It's on blockchain.news. So if anyone looks that up, they'll see my article. There's a picture.
Check the article out, guys. Yeah. Alex writes some great pieces. Very, very thought-provoking.
Thanks, man. So what I wrote on there is that the real battleground is money. Whilst Libra's calling their thing a blockchain, it's actually not by definition. Jameson Lopp did a really good sort of expose on that and just sort of showed that this isn't actually a blockchain. It's just they're just using that terminology. Facebook doesn't give two shits about building a blockchain. What they care about is building a sovereign currency that is, or a non-sovereign currency, sorry, that is not issued by the state or a government. That's a much bigger play, and that is what they're going for. And what Libra's done is it's actually in the minds of everyday people is it's opened up this idea that, hey, maybe a currency that's not issued by the Australian government is actually possible. And I think Libra's red-pilled more people into Bitcoin than anything else. But here's what you've got. You've got, Libra is this threat now to, sovereign states because think about it, you can't separate politics, philosophy, or economics. They're intertwined, right? And you can't separate currently in the way the system works. You can't separate the economics or the monetary unit from the state that manages it. You do that, the state loses all power over its people. So let's say you're a random country in South America with a constantly inflating and devaluing fucking currency that you have. If you let Libra into your country, what do you think the people are going to use? They're going to hold their wealth, you think, in your crap currency? Or they're going to fly to Libra? They're going to fly to Libra, and then what happens to the government? It falls apart because they have no economic lever with which to manage the country. So it's a Faustian bargain for the smaller governments, and it's a threat to the larger governments, unless, it becomes just a facade for the US dollar. But, that's another theory that we won't discuss. But what it does, though, is... in the process of them going for that big ticket item, which is a new form of money, it validates Bitcoin. It validates Bitcoin's choice to remain a censorship-resistant, sovereign, secure unit of account. Because Bitcoin couldn't be more similar or more different at the same time from Libra. One's owned by the people, and one is owned by a few people. One's sort of like, the money, the free market money of the people. The other one is like the 1984 George Orwell sort of, representation of what money could one day be. And in the process of doing all of this, all of the other altcoins, all of the other shitcoins, all of the other ICOs, in one fell swoop have become obsolete. Everyone who optimized for smart contracts, for faster payments, for all of that sort of shit, why in the name of Christ, or for dApps, right? Why in the name of Christ would any of those guys want to build on Ethereum or on any of this crap when you could technically build all of that on Libra and get access to 2 billion people? So it's made all of them obsolete, but it did not make Bitcoin obsolete. It actually reinforced the need for something like Bitcoin, because Bitcoin still represents the only place today outside of a physical form like gold where you can hold wealth that cannot be confiscated, cannot be inflated, and cannot be corrupted.
In terms of Bitcoin, I know you're 100% bullish on it, but what are some of the challenges you see ahead from Bitcoin right here? We've got a halvening coming up. And some people have thought it may be. How do you feel about the halvening coming up, for example?
I think it's just normal. It's part of the process. I think we will only be able to look back decades from now and realize the brilliance with which Bitcoin was sort of designed in the early days by Satoshi, whoever he, them, they were, right? The issue, how Bitcoin was issued in the early days, and the fast issuance schedule, then the tapering off, that asymptotic issuance schedule, that is it's optimized for spreading it in the early days, benefiting those who have patience, who have a low time preference, and benefiting those who took risk in the early days, whilst allowing it to be infinitely divisible means that people can always come and acquire some Bitcoin, whether in the form of Satoshis or whatever, at whatever point they come in. The halvenings along the way, I mean, all they do is they're just like a rude awakening that, hey, this thing is fundamentally scarce and inelastic.
So any challenges you're concerned about, or things that...
Man, I can't think of anything. I think,
regulation,
maybe,
people banning exchanges, do you think that's going to happen?
I think banning exchanges may in the short term, prevent some sort of liquidity, but I'll tell you what I call it the greed and arrogance spectrum. So you've got the arrogance on one side from the governments and the central bankers of the world who think Bitcoin's just this game. And they're like, ha ha ha, yeah, it's never going to work. Good luck with you guys playing a game there. And they're sort of, far enough away from it. Whilst the greed on the other side, which is enterprising individuals, companies, organizations like the Fidelities, the Bacts of the world, like the Ambers of the world, and all this sort of stuff, who are out there building all of this cool new infrastructure for this new emergent asset class. So we're driving adoption and access and broader holding of this asset, whilst there's this arrogance here. So I think the window of opportunity to stop or to halt Bitcoin has either already closed, or it's closing so fucking quickly that nothing can be done. So I'm really not concerned. I think, I battled to find out barring an all-out nuclear war where we don't have the internet anymore,
Well, even they've got things in space, right?
Yeah, I do. So Bitcoin will probably outlast all of us. So, I'm not worried for it. I think it's a pretty tough kid.
Okay. Lastly, now to defend your title, Aleks.
Oh, God.
The price of Bitcoin, New Year's Eve this year, 2019 US dollars. What are we at right now? I think we're at 9,700 right now, pretty close. Some interesting movements in the market right now. Geez, Tezos up a lot there. I'm not sure what's going on there. But what is your prediction, Aleks? 2019, it's going to be, what is it? It's going to be 11 years, well, the 11th year of Bitcoin coming up. The halvening is coming up.
New decade, man.
We've got the stock to flow ratio graphs going around right now. Big deal. What is your prediction?
I have no idea, man. Like last year, I was convinced that we were bearish only because of my understanding of markets and having been around markets and just feeling like the people were still overly bullish despite the downtrend. And I think when we caught up, it was still at like $7,000-8,000 or whatever, wherever it was. And I just felt like that it still had a long way to go. Now, I don't know if I'm convinced that this run is the basis of, you know, the next run. Like, I'll tell you what, I'm more hopeful that it'll still be sub 10, but I think realistically it's probably going to break the prior high, and I think we'll be closer to 50 than we are sub 10. But yeah, like those upward moves are going to be sharper than what we've ever seen before.
Okay. Aleks, so thank you so much for joining us
Anytime.
on the Daily Exchange, and appreciate all your knowledge and understanding of Bitcoin.
Thank you, sir.
All right, guys, do subscribe, do follow us on the Daily Exchange, and we'll see you guys later. Yeah!